Alright, this is Heather here, and this is going to be the fourth video in our mini series on how to use Bullseye trade ideas. So, today we are going to go over a very interesting alert because there are so many things that you could have done with this alert. So, we are going to explore what was the alert, how you could have found good entries, how you could have found good exits. So, it's a really interesting alert. It panned out really well, but there were a few caveats that I want to discuss. So, the alert is MSFT. So this had a bullish stock expectation. Let's actually do this. This had a bullish stock expectation, but the options flow tool was telling us to buy puts. The confidence was 70%, and it was again a 2 day, 3 days till expiration alert. It went up. It went up at around 150%. So those are again, yeah, quite large profits for anyone to have. So we are going to, this was a really interesting alert, so we are going to discuss what actually happened. So with this alert, what the caveat was that MSFT, Microsoft, was going to have earnings either on 28th or 29th, and earnings are always tricky. They're always very hard to play. And for anyone who's new to options trading, I would highly recommend that you do not play earnings, because if you are not familiar with the term IV crush, then there is no way you should ever play earnings, because you are going to get burnt and you are going to have huge losses. So please listen to me and do not play earnings if you are a new trader. If you are an experienced trader and you know how IV changes around earnings, then it's totally fine, because you know the reward and the risk. Let's move to the alert now and see how we could have benefited from the alert, because the price action tool says that the price action is bullish, but the options flow tool is telling us to buy a put. Why is that? I'll explain in a minute. So this is the MSFT daily chart. You can see that the alert was on 27. So just looking at the price action, we can see that we had a resistance right here. Again, a really beautiful resistance. And on 27th, we actually crossed that resistance. So let me zoom. Okay, see? So on 27th, we had actually crossed that resistance, and we were sitting above that resistance level. We actually closed above that resistance level as well. So it makes sense that the stock, the price action is telling us that the price action is bullish. But there's something going on the options flow side that makes the tool thinks that the price action, the options flow is bearish, and that the contract that it told us, the buy put contract, it might increase in value over the next let's say 1 or 2 days. So that's the preface, and that's what was happening when the alert came out. It came out at the end of this day, and the very next day we have a huge gap down. Isn't that awesome? I would say that's awesome, but earnings are extremely hard to predict as well. So it wasn't our AI that, like, for we can't give the AI 100% credit. There is always some luck involved when there is an alert before earnings, and then the alert pans out really well, because when it pans out, you are guaranteed about 100 200 profits, but many times it also doesn't pan out, so you also have huge losses as well. So let's not play those until we have a good entry and exit. So in this case, we are actually going to see that we did have really good entries and exits after the earnings. So let's pull up the 15-minute chart. This is the chart that I use to trade these contracts. And from this, so at this point in time, we can see that MSFT alert, it's April 27th at about 3 o'clock. So at about here, right? Now you can see that at this point in time, price was going up pretty nicely. It was respecting the moving averages. We had a really good support level here. Here, and so everything looked bullish in terms of price action. But since there were some puts, or there was some activity going on the options flow side, that made the tool think that there is some bearish expectation. That's why you see the buy put. So you always need to know why and when do these tools predict in opposite directions, because we can see that in this case, although there was contradiction between the two tools, you know the reason that the price action looked good, but something was going on the options flow side that made the tool think that there is some suspicious activity. So you need to look into these types of alerts, especially when confidence is high as well. So the alert was given here, and again, as you can see, it's a put alert. So there is no signal here that tells us that we need to enter. if you want to say that there is a resistance here, then I would say that the alert was actually given here when we had just broken this resistance level. So this was another sign that there is no way you can enter this alert right now. We had again a long-term resistance on the intraday chart, especially think this is like 3 days, and then we finally broke it when this alert came in. So what happens with many of our new users is they join the platform, they see such an alert, then they look at the price action and they think that the platform sucks, because why would the tool give an alert when the price just broke a resistance level and it's now above that resistance level, and now that resistance level is acting as support. So this mini series is actually there to address all those comments as well. So we can see that again we broke the resistance, now that's a support, but the tool is saying buy a put. So you have to remember that the tool is saying buy a put because it believes that the value of that put contract is going to increase in the next 1 or 2 days. It's not saying that the value of that put contract is increased in the next 15 minutes. So you have to understand that when you are using this tool. So now let's say you trust the tool blindly. If you're a new person and you buy it here, the next day you are going to have huge profits because the earnings came out, maybe people didn't like the earnings, and then there was this huge red candle when we opened next day. Yeah, we closed, and then here is where we opened next day. So if you had just gambled some money into earnings, you would have earned a lot, and that's where again the power of AI comes in. It was the AI that had gone over the flow and thought that the put contracts might increase in value after earnings. But again, you wouldn't enter here. It doesn't make sense. If you entered, then that would be a very large risk that you are taking. So we would not enter here. But this was again just an example to show you that the AI alone is actually quite powerful as well. But we want something better. So what we are going to do is we are going to look at the price action afterwards. And again, since this is our fourth video and we have been drawing support and resistance lines manually, now I'm just going to click on these SR lines, and this is going to build these SR lines in an automated way for us. This is an algorithm that we have. Okay, so now we can see that this is the price action that we had. This is where the alert came in. This is where we opened next day. So now let's see if we can actually enter in that put the next day, because we couldn't enter here because there was no setup. So let's see if there is a way to do that. So we can see that we have a support level here. Let's see if this is actually a good support level. This line was not picked by the AI, but it seems like this was a good. So we touched it here, and now we are touching it here. But then we also have this level where we touched it here, and here. So let's zoom in. So again, we had to draw one support level. So you always want to look at the price action to make sure the algorithm is not missing something. It seems like it just missed one line here. So now we can see that we have a resistance line here, and we are in a downtrend because all the moving averages are going down. So we come here again, there is no setup here because look at this candle. It touched the support and it went up. You would not enter here because there is no setup here. We want the price to go up. We want some candles to come. We want some candles to close here, and then we want to enter because we are expecting the price to go down. So then we can see that we went up, but this level acted as resistance here. We can see that the candle went up, but it came down here. So let's see, we are still not sure because it's just one candle, and we had some like this level had acted as resistance and support before, but now today this acted as a resistance level as well. And some people might say, how did you know this was going to act as a resistance level? We did not. When the price action was happening, all we had was this previous price action, these 3 points where the price touched them and bounced back up and down. So we knew about this level from here, not from here, because again, when you see this in real time, you won't be able to see these things, and that's a mistake that a lot of the tutorials make. When you are looking at historical data, it's very easy to see things, but when you are doing this in live trading, it's slightly hard. So we were actually aware of that level from before, but since this actually touched that level and came down in the very next candle, that's now when we look at the chart again, we know that again there was this level. Now we have just respected that level again, so now we know that this level is something that we just respected, so we need to look at this level again. We touched this level, but since this is the first time that we have touched this level today, so let's not even enter here. We are still not sure. We still want some confluence factors. You can see that there is none here. The moving averages are far off. Let's see, the moving averages are here, and the anchored VWAP, sure, but there's still some distance. So we still wait, and we see that, let me zoom in. We can see that the price then came down. It's trying to go up here, so again we are not sure what's happening here, so we are going to wait. The price goes down again, it stops here and then comes back. So this might have been one entry, but as you can see, this is just one confluence factor. We have been talking about adding multiple factors together before going in, and here you can see that it's just one. So one is most often not enough, so you need to find multiple factors. We have one here, so let's say if you enter, you're going to have to exit, because we go down just a little bit, and then this is actually now intraday support. And so see, this is why you need support and resistance levels. So this is now becoming an intraday support. So you have this level, but again it's a very weak level. So you go up, and here you can see that we had this anchored VWAP resistance, and we have the 20 moving average as well. So these were two signals, but again we want to find something more. Let's say we want to find 4, because when we have 4, we have a horizontal one. Let's say we have a trend line resistance, we have anchored VWAP, we have moving average resistances, then that's a really good signal. So let's say we waited a little bit more, or we just bought here. This would have been a perfectly fine entry, and unless we went above this 50 moving average, let's say we would not have exited, or if we closed above this blue line, which we did not here. So when you are setting your stop losses, when I'm talking about these levels, always leave a little bit of margin above or below your support and resistance levels, because what happens sometimes is it's just a story. I don't know if it's true or not, but people often say that the algorithms that are trading in an automated way, they sometimes want to get the price just a little bit higher or lower than these current prices, so that stop losses get hit, and then the price can continue in the other direction. So just leave some margin above and below your levels, so that you don't get stopped out immediately, because you can see the price went up. So if you had your stop loss right above it and you entered here, then you would get stopped out, and then the price went down. So let's not do that. So you always need to leave some margin, and you can see that the margin is right here. The 50 moving average is right above this line, so that would be a really good stop loss, because that also gives us some margin. So this would be your stop loss if you entered here, and this would have been a completely fine entry. When you are here, you would be in a bit of a loss, but you need to follow a disciplined approach. So unless we go above the 50 moving average, we are not going to exit, so we are going to stay in the trade. And we can see that the next day we actually opened. The next day we opened a bit green, but this level acted as a resistance. This acted as a resistance yesterday. This is a new day actually. This is Thursday, April 29. This was April 28. We touched this resistance again, and then we fell back. But we had a support level below. So again, we are just playing with levels here. We had a support level below, and you can see that this first candle, this actually respected that support level totally. So you cannot enter right here, because we have not closed below the support level. Now let's look at again. Okay, we are here. So this candle, you can see that, let's say this was a decent level, but this was a very weak level. So even this candle, now the next we will break this one, and this is a 15-minute chart. So what your entry is going to be is this very candle. You are not going to enter in this candle, but if you had the 5-minute chart open, then you'd actually enter somewhere here, because the previous candle actually closed somewhere here, and then the next candle was red again. But for the sake of simplicity, let's just go with this chart. So we can see that we even broke this support, and let's say this is not a support level. If this was not a support level, then once we break this this support level and we are down, and you can see on the price action that there is almost no chance that we are going up, and we keep going down. That's your signal that we have finally broken the support, and now that support has become resistance. So somewhere around here you cannot enter here, because in a live setting, again, it's hard to know if this is going to act as a support. So you need to wait before the price, let's say, reaches somewhere here, and that is going to be your entry. Let's say you entered here, and again, since we are talking about we are talking about two contracts, let's say you enter here. Now you are going to wait, and you're going to see that you can probably exit your first contract here, but this candle just went right. This candle just crossed this support level without any hurdle. So you can see that the very next candle there was no problem crossing the support level. So you can probably exit your first contract right at this level. But if you just wait a little bit, you're going to see that we just crossed this level without any problem. And look at the next two candles. Now that level has become resistance. And again, I'm not trying to flaunt too much, but these levels were drawn by our AI and by our algorithm, and you can see how well they're working. So you're going to, let's say, exit one contract here. The next contract you are going to keep, because you are not seeing another exit. This would be our exit. If we touch this line, then we are going to exit our second contract. But we can't really see anything here. So similar to many of the previous alerts, you'll see that when a new support is being formed, the price touches it, then it touches it again. So if you see the price touch the same level about 4 or 5 times, then you can know that that might become a support level. So that's another tip now, because we haven't discussed this tip. If you see the price, if you see that the price keeps touching the same level, then that level might be becoming a support now. So we can see that we hit it 5 times. So when we hit it 5 times and we start going up here, you know that this level has now become a support level. And since it only sort of we only hit it 2 times, that's why the algorithm hasn't driven it. It usually looks for the more stronger SR lines. So now you either exit your second contract here, or let's say you want to wait till here and you're just not sure if this is a support line. You're going to take note of this line as a potential support, but you're still going to be in your last contract. Now let's wait for the price to go up. We can exit the second contract when we break this level, because you can see that we have talked about consolidation. The price consolidated right below this resistance line, which is again now acting as a resistance, and then it broke out here with a slightly high volume. So you are going to exit your second contract here. So that is going to be your second exit, where you entered somewhere here. You first exit was here, second exit was either here, or second exit was either here. So those are going to be your 2 exits. Let's say you did not exit the second contract. You have to exit partially when you are, let's say, 30-40% profits. Let's say you did not enter and you thought the price is going to keep going down, and you wanted the price to touch this level and then go down. So let's say when it started going down, it hit this level again. Now if you took note of the previous level, you are going to see that it's the same level, and the price touched it and then it started going back again. So although you didn't exit here, now this is your third exit for the second contract. So you have to exit here now, because this is the third time that the price action has shown you an exit, and you have to take it now. So this was the alert. You can see that we had one entry. There were no other entries here. The second entry might have been this, because we broke the support line. We went up, but we respected that line as a resistance. So this could have been your second entry, because in the next candle, when you see that we are still not able to close above that level, because now that's a resistance level, this is going to be your entry now. So from here to here might have been your profit. That would, I believe, be like 10, 20, 30% profits. But again, we are trying to follow a simple formula. We are trying to follow a step-by-step procedure. We don't want to trade randomly. We want to have a disciplined approach. And so that's how you could have used this trade idea to generate profits for yourself, and to make yourself disciplined, and to find good entries and exits. Again, if you gambled your money, you would have earned a lot more money, but you can only gamble so much. So if you, let's say if you had some insider scoop and you saw a buy put alert, sure, you can buy the put right away. But uh, we want to guide you towards making more disciplined trades where you're not losing a lot of money. So as you can see, the stop losses here were pretty tight. Like when we entered here, we had a stop loss somewhere around here. So it wouldn't be, I would say it would be like a max of 30% loss, which is good as long as you are making good trades and getting all these 50% profits, which is okay. So that's how you can use entry exit techniques that we have taught in this video. We are going to do a few more alerts in this mini series, but I hope you learned something in this video. I'm going to see you guys in the next video. Thank you so much for watching.